Hello, everyone. Welcome to another episode of the Dead on the Money podcast, where two financial advisors, myself, Richard Coffin, and my co-host, Derek Deadman, try to make finances a little less spooky. Today, we're giving the free one-time fee course of $200 of how to run a successful Ponzi scheme, swindle a bunch of money from your friends and family.
Best return on investment.
That's right, out there. Yeah, we can say that. Okay. That's not a problem. Yeah, maybe not. Maybe we'll move away from that. But today's episode is going to be on the topic. Yeah, for legal reasons. Just kidding. We're going to be talking about the subject of financial scams and investment scams that exist out there. The common types that you come across, how big of a problem it actually is, and unfortunately, the growing phenomenon we're seeing it become. As well as some tips towards the end of how to avoid these types of scams, because while they might seem like something that you just hear about in the news or watch in a movie, it's quite prevalent and very easy to stumble into these issues. They're becoming harder to identify with a lot of the growing technologies around scams. Scammers are always getting smarter. Mm-hmm. And Derek and I will actually share some personal experience we have where I myself have looked into more of the gray area frauds and scams that you can see in the space. And Derek, you actually helped take down a Canadian Ponzi scheme.
I did.
At one point, right?
I did.
So we'll share the interesting story. Derek's time as a private investigator.
That's right.
Ponzi scheme vigilante.
It's a cool story, I think, but
it is cool. Yeah, you've told me it before, and,
yeah.
and that was actually that might have been inspiration for this episode. Was when you told me about.
Yeah, I think so. That was definitely to share that experience, and just I've kind of been interested in this topic for a while. It's kind of sad in a way how many billions and billions of dollars are taken from unsuspecting investors, but it's I think we'll talk a bit about the numbers in a bit about how much is lost, to put the scale to it, because I think you're right. I think we see it, we hear about the Bernie Madoffs and stuff, and you think, and you read the books, and you're like, wow, that's crazy, but it'll never happen to me.
That's right.
But I think what's telling is one of my favorite shows. It's on CNBC called American Greed. I don't know if you've ever seen it.
No, I've never heard of that one actually.
So I think this is kind of telling. So it's a show on CNBC, narrated by Stacy Keach. I don't know if he is. He's an actor, but he's got a great voice. I think half the show is just how
so you can hear him.
Sweet he sounds, but
right, okay.
But I think it's on hiatus now. I think it stopped airing in 2024, I believe. I can't remember, but it aired for 17 seasons. So a show that is dedicated solely to sharing stories of Ponzi schemes and investment scams.
Right. Okay.
Was able to have 17 seasons. So that tells you how many.
A lot of content.
A lot of content.
Right,
and so that I think that tells you how big of an issue this is and just how much is going on. So, so we'll share some of the common ones out there. There's been some in the news, even in Canada lately and stuff too, like the Crypto King and
that's right, and lots of and to your point about how much content there is out there, there are other creators. CoffeeZilla is one of the big ones that comes up, who can have an online career just quite frankly doing private investigation into the slew of frauds and scams out there that quite frankly aren't getting the regulatory overview that they deserve, that they should be. We aren't seeing a lot of the authorities step in those situations until many years down the line, and maybe we can talk about that too with Bernie Madoff. We'll kind of explain some of the big ones that we've come across, and some of the scams that we've seen in the space. But to start off, we can talk about some high level stats about how big of an issue it really is.
Yeah, so I just there was a Federal Trade Commission report that they track this stuff, and the other important thing is I think they even mention it when they bring up the data. This is just reported scams, and this is just kind of estimated or reported amounts. And in 2024, it said there was just American consumers alone lost $5.7 billion in investment
in just
scams.
that year.
Just that year,
right? And
I think that was up 24% from the year before. So it's clearly a growing problem. Mm-hmm. Canada in 2024, it's less, but per capita, I don't know what that would be, but it was over 300 million in Canada reported losses. That's just reported. But there was over 4,000 investment fraud cases reported to the Canadian Financial Consumer Agency. So it's significant. We're talking that's just North America. So you can imagine kind of globally, I think it's a big problem. And it's year over year, right? Billions and billions. And I read another report kind of stating that for every dollar lost, there's like a $4 impact to the economy too, because it's not, it's because of the money that takes to investigate it and all that kind of stuff too. So there's a huge, that's a massive impact, right?
Yeah.
And I think for us, I think the other thing that, it's not just interesting to kind of read about, because it's, it is kind of fascinating, because it's kind of crazy that it happens and it's so much. But at the same time, for us, I think as financial professionals, trust in our industry is such a kind of shaky thing at times. Yeah. And so, for people that try to do everything, the kind of the right way, like it kind of, it's not great for the industry, right? Yeah. So it's to kind of shed light on it, and for us hopefully to be able to kind of let people know how common this actually is, and kind of things to watch out for. And in the end, I think we could probably summarize the best way to avoid it is if it's too good to be true. Yep. It probably is. That's probably the best adage, but there's some other stuff we'll talk about too kind of as we go that hopefully will avoid it. But it also seems that the biggest growing area now really is scams involving cryptocurrency. Yeah.
So in 2023, it's a bit older, but in 2023, the FBI actually had their first cryptocurrency fraud report. So because it was becoming more, it was proliferating as an issue, and they found. So what's interesting is, first of all, they had $5.6 billion lost to cryptocurrency fraud. So the 5.7 figure in 2024, that's specifically investment scams. In 2023, $4 billion of crypto scams were related to investment fraud specifically. Wow. So crypto scams in general, $5.6 billion. That includes everything from pretending to be a law enforcement officer. You have to pay this fine in Bitcoin or whatever it is, and to extorting people, pretending to be tech support. Those are all cryptocurrency scams, but specifically investment scams are the lion's share, whereby they convince you of a cryptocurrency investment opportunity. And what's interesting is they highlighted specifically what's called a pig butchering scam.
That's a nice name.
That's right. Yeah, it really makes you feel good about being a victim, right? Yeah. But a pig butchering scam is when the fraudster actually tries to develop a relationship with you, whether it be romantic or otherwise, and then segue that into a cryptocurrency investment opportunity. So they try to abuse that trust that they built with you to go into to steal your money effectively. And what's really tricky about that, outside the fact that cryptocurrency, we've seen movements towards deregulation, which is tough because it's already a very
big issue,
not regulated industry. But we're already seeing sort of some of the strengths of certain U.S. financial regulators, which is where it's most prolific, being pulled back quite a bit. In addition to that, we also have developing artificial intelligence. And I'm sure we've all heard the terrifying stories of fake hostage situations where people take the voice of someone's loved one. Right. So that's not an investment scam, but still goes to highlight why we're seeing issues with cryptocurrency and developing AI technologies, and why this could be a bigger problem over time. When you have people who are able to fake video, audio of virtually anyone, it's going to be a lot harder to tackle, which makes understanding it that much more important.
One, I mean, and I guess with AI too, because I think there was something recently with like an AI video of like Justin Trudeau talking about the next big
now it's Mark Carney. That's right.
It's now Mark Carney. So I mean, it's hard to know.
And you know what? So
we're in the matrix right now, 100%.
And I'll say, I've had clients of the company reach out about the Mark Carney cryptocurrency coin, and I think there's a level of where we encourage people to reach out whenever, we say, if you have any questions, we're a point of contact. But it's still shocking to see what you consider to be relatively, it goes to show that can impact anyone, right? These are clients who have a good amount of money who might still come forward and say, hey, I saw Mark Carney talking about a cryptocurrency coin. And so it's that level of baseline understanding that you have to really work on developing, and that sort of, cautious approach with, unfortunately, everything you see these days.
We have to realize there's more money for the fraudsters than there is, for the enforcement of trying to stop this stuff.
Down,
so it's
an unprofitable venture.
So it's going to always be, they're always going to be ahead of the game. So it's up to us kind of as consumers, and then us, I think, the legitimate folks in this industry to try to help educate our clients and hopefully
just ignore the intro where we to sell a Ponzi scheme.
Well, no, we should instead we'll sell a course on how to not be in a Ponzi scheme.
That's right. For only 4 payments of $500.
Yeah.
I don't know, as much as you're willing to pay us, I guess. But that actually leads to kind of the next segment, which is a good one to touch on, of the common schemes we see out there. What are the common scams? Because they do typically fall into different categories. We talk about pig butchering scam. I think that kind of falls into one of these other big categories, but there's sort of 6 or 7 common scam types that you see. The first one, which I'll let you talk on because you actually just read a book about the Bernie Madoff, but Ponzi schemes and pyramid schemes, which are used interchangeably. They sort of reference the same idea. Ponzi referencing Charles Ponzi, who was I don't know if he'd be the first Ponzi scheme purveyor, but definitely the guy who coined the term through his own illegal activity. Started one of the first known modern Ponzi schemes in the 1920s, and we still call it a Ponzi scheme today because of how common it is. So maybe you can talk a bit about what those schemes actually entail. Yeah.
So Ponzi schemes, I think so. One kind of preface to that too is when I think of this and kind of what we're talking about, just to show how big and broad this can kind of be too, is we're talking just like more investment scams, and this is trying to get people to invest or fraudulently invest,
which is one of the more common types of fraud out there these days.
But I mean, like financial fraud goes even bigger than that, right? And we could talk about. I mean, we see it like even in our day. Like I see, we get. Like you start thinking like the Nigerian prince schemes and those type, like there's money laundering. It's even bigger and broader than that. And
I always get the unpaid tax bill ones or something, which hopefully that's it's either that or I need to contact my accountant, one of the two. But
if you have to pay your tax with iTunes gift cards, then it's legitimate. That's when
there's
it's
a free tip for you. If it's iTunes gift cards, maybe
But like even beyond, I mean, there's like stuff that isn't kind of covered, and then this is just so that we know kind of where we're narrowing our focus here a bit. But even stuff like when we think about like Enron, and I just actually read another book on Theranos, the medical
blood
device,
testing
the blood testing one, and a fantastic book. Interesting, really interesting, like how they were able to get how fraudulent, like how they were able to get convince so much money like it's crazy. But in hindsight it's crazy, but obviously but anyway, so Ponzi schemes are essentially one way or another convincing investors to invest with you, whatever you have some proven strategy or however you're able to get separate people from their money, promise them sort of an outlandish return. But really what they're doing is using the money they're getting in from new investors to pay old investors.
Right.
And so in some Ponzi schemes, they will attempt to invest the money. In most, they don't. They just use the money to kind of fund their lifestyles and then pay. And Ponzi schemes, and we'll see even talking about somebody like Bernie Madoff, can go on for a very long time.
Yeah.
So as long as they're able to convince new investors to come in, and it's almost like the more successful a Ponzi scheme is, the longer it'll be able to go, because the existing investors who are getting their big returns, which are just coming from new investors' money, are telling all the people, I've been investing for years and I keep getting my 20% or whatever it is. And so that's Ponzi scheme. Pyramid scheme is kind of the same idea, but and pyramid schemes can be thought of broader, kind of like you think of multi-level marketing and stuff like that. But from like an investment standpoint, it's the same idea as you kind of need new people coming in to be able to pay off existing
one person
people.
at the top recruits two people to invest in this case. They help pay for the guy at the top's return. Then those people, they help recruit more investors and kind of leads to that pyramid.
Kind of reminds me of a funny scene from The Office.
I've seen that, where he's convinced he's like, well, what shape is that? And to make that distinction, it's a gray area where I think the definition of a pyramid scheme is when there's no legitimate business behind it, and
you have
there's
you're recruiting other people, basically.
And part of being recruited is also paying into the system, which is also where you can kind of make that connection to investments as well, where new people are paying into it. In Canada and the US, there are multi-level marketing where it's not legally a scam because it's there's a functional business behind it, and there's still controversy around these companies, but you know, theoretically it's a legitimate company and a legitimate service and work that you're doing, but there's still that benefit with multi-level marketing of hiring more people under you. So there's still that incentive of, well, if I join this company, there's incentives and money on the line for getting more people to come in below you to do the actual work. So
because I think the issue is that really you're not making money truly from the product. You're more likely to be successful from hiring people, from getting people under you to sell the product, and then really they are getting the next person down.
And that crosses the scam territory when that's your source of revenue.
That's your source
right?
Of
is just hiring more people to join the scam. So kind of a interesting area where you have companies that legally operate in multi-level marketing, and you know, you look at the organizational chart, it might still be, but you know, I guess you could argue that most organizational charts are pyramid shaped, but to say that it's with investment specifically, it's that payment that leads to the legality being up for question, I guess. Then there are boiler room scams, which if you ever seen the movie Boiler Room, kind of touches right on it.
Wolf of Wall Street's another kind
Wolf
of
of Wall Street. That's right.
That's really kind of
it's really that. And that's really just the high pressure sales tactics. Where I believe there's kind of, I've looked into it and there's conflicting information about what the name comes from, but my understanding is the term boiler room refers to these companies operating in the boiler room of an office building, sort of in an illegitimate office location, either to hide their activities or just make it difficult for people to contact them. But effectively, it's people taking, you know, historically really cheap or shady or risky stocks where they make a huge commission on selling these investments because there's no buyers out there, and they promote them using fake promises, or you know, they really hype up these positions when they're really not deserving of that kind of praise. And not as much of an issue these days because we don't typically buy stocks in the same way that we used to, but you know, back kind of pre-internet, stocks were always bought over the phone. So it was more common to get a call from your stockbroker and from these companies soliciting these services.
And I think they'd call, you know, they'd have a legitimate sounding name. I'm from so-and-so, like the hot stock tip, and they'd pressure. And
what's the Wolf of Wall Street one? Something Oakmont or something.
It
sounds very legitimate.
It sounds very legitimate.
So that's boiler room scams. And then of course there's pump and dump, which you can take pump and dump, but the name sort of says it all.
And I think those are kind of still more prevalent. Maybe even more prevalent now in this day and age with cryptocurrency and anything, because you know, but basically pump and dump is where people you know, promote stocks, like, you know, they're on, you know, right now probably like on these stock boards or this, or maybe even with YouTube videos, whatever, and they're really trying to aggressively be like, oh, you should do it, and then get people to buy. And especially this is usually done with kind of smaller cap stuff that, you know, just a bit, some trades will really move the market, and they try to really, they make these promises, this is the next big thing, and they really pump it up, you know, and a little bit of volume will really jump the price, and then they dump it, right? They have theirs, you know, so really they, you know, they're trying to just get that price kind of artificially moved higher so that they can dump their stock at that artificially high price. And
what's tricky about pump and dump is it's very difficult to prove. Technically you can even have a pump and dump where someone doesn't market anything, just your buying activity. If your intent is to pump and dump a stock, if you go into a call it like a very small cap stock with the intent of buying it to it's called spoofing, or sending orders to try and fake buying activity, or otherwise just convince others to start buying it by, you know, people will say, oh, wow, like there's a big investor buying the stock, I should start buying it, and then dump it shortly thereafter. Even that can qualify as a pump and dump, even without that sort of explicit marketing. The problem is it's very difficult to prove intent around pump and dump. You sort of have to have that smoking gun of like it could be a text message of, hey, I'm about to pump and dump the stock or whatever, right? Because it's very difficult to prove that someone didn't just buy a stock and then sell it when it looked attractive to do so, right? So there's always that defense you can make of like, well, I didn't know I was going to be pumping the stock, I just purchased it and then it rose in price, so I sold it. The other issue is there's a lot of gray area legally, and we can talk a bit about our own experiences looking into some of this stuff. But there's a lot of gray area with how stocks can be promoted and what's legal and what isn't legal. It's kind of like gambling, right? Like these gambling websites are able to use celebrities to promote the safety around gambling.
So
not
rules
gambling
come
itself.
out and they're just pretty good at
circumventing it, right? And getting the message across, even if you're technically checking all the crossing the T's and dotting the I's. So that's kind of an issue with pump and dump. That's why it's also very prevalent, especially with cryptocurrencies where you typically have these very small pools of money where it's easier to move the price. You see that happen all the time. It's almost become very, some people are very, there's even individuals and celebrities who have become very blatant with their intent at times. I don't know if you know Barstool Sports, but there's a guy, Dave Portnoy, who got in trouble, at least social backlash, for basically saying that he doesn't care if he promotes a cryptocurrency or whatever. Like that's the name of the game is kind of what he said. And so far, no legal consequence to that. So it's unfortunately very blatant these days. So you have to be really careful with that one. And it's why you really have to take Didn't
the Hawk Tuah girl kind of get in trouble?
Yeah, Hawk Tuah
didn't she have her own kind of coin and stuff too?
Yeah,
it's just great. Yeah.
And like in that case, I think you can say she should have known better. I think in that case, it was more there were people around her who basically sold the coin right at launch and made a bunch of money. How much of that falls onto her, I'm not sure, but legally she's not being charged or anything of that sort. But again, it's just there's so little disincentive for doing these schemes that it happens all the time, whether it's the person promoting it themselves or the team around them that's ultimately trying to take your money. So cryptocurrency, especially, really common area to see this stuff, why you have to be really careful. And then kind of going back to some of the more old school terms, there's advanced fee fraud. That's where you're charged up front for the promise of a generous return. You can think of it sort of like the Nigerian prince of, pay me this first and then I'll return you a bunch of money. You have to pay my transfer fee or you have to pay my X or Y fee, at which point I'll be able to then return the money at a higher return or earn this amount. But
I've actually heard of now in the kind of cryptocurrency space where you kind of invest, and it's definitely fraud, but it's cryptocurrency and they invest your money and it's like they've had this big return and, I need some of my money back. It's like, okay, but you need to send us X amount to cover this tax or this whatever, and then to get your money back. And so
it's another 10,000.
You need to put in another, and it's, so then it's, so I've actually kind of had some experience with that, not personally, but,
Which to touch on quickly, because, I know there's been a client at one point that experienced something similar to that. And I think one sort of highlight that we, like to touch on is A, if you ever have a situation like that, you can always speak to a professional to get their opinion on it. And B, there's not anything really like that where, estates is one thing because there are some tricky things with estates. But in terms of if you have money in a financial institution, you have to pull it out. There are transfer fees, but they're usually like $100 to $200. Anything that's starting to stretch into the thousands or tens of thousands, you should probably call the authorities because that's pretty suspicious as to why you can't access your own money.
And then I think too is, maybe if you're pulling out here in Canada, if you're pulling out, from a registered account, like an RSP or something, yes, the institution, a legitimate institution will have to withhold some of that, based on CRA's guidelines to submit to CRA. But they're not going to phone you and say you have to give us money to give to CRA.
They can hold whatever they need of your profits.
So if I think that's the one thing. It's like if I've legitimately invested and
there's a fee
and I want my own money back, for me to have to give you more money to get my money back, like it just doesn't make sense. I think the challenge is by the time that's come, you kind of are in for a penny, in for a pound, right? So, I think that's what they're kind of hoping for. So, but
they're just trying to get the last kind of juice out of you.
I know.
That's right. Yeah. As you're leaving kind of thing.
Yeah.
And it's a common one, that you see and kind of the next category is cryptocurrency scams. Obviously we've been touching on it in some ways, but I think cryptocurrency scams might allude more directly to the fact of buying a cryptocurrency that itself is not legitimate or a scam of some sort. And that could also apply to, say, stocks, I guess, like, look at Enron and things like that, where it's difficult to discover because they've gone through a more intensive legal process. But with cryptocurrencies, it's any cryptocurrency could end up being rug pulled.
It's all made up anyway.
Yeah. I mean. So and rug pulls, for maybe the uninitiated, I'm probably, if people are watching this podcast, they've heard of rug pulls before, but essentially it's essentially a pump and dump where you have the creators say hold a 50% or a significant portion of the float of a cryptocurrency. They sell the other 50%, they hype it up, they promote it, a bunch of people buy in, and then all at once they pull all their money out of it. They sell all those cryptocurrencies. If there's things like a liquidity pool, meaning that these cryptocurrencies have this pool of money set aside to help fund withdrawals, to help pay people out if they want to get out, or to otherwise support the value of the cryptocurrency, they pull that money out. It's just, that's pulling the rug out of people is kind of the idea of it.
Right.
And you see it all the time. And you look at all the price charts of meme coins and the like, and there's always a drop off right at the end where you see it happen. And compared to a pump and dump, where you can see that same action with cryptocurrencies, it's a lot more dramatic, where you see them go from $100, $200 to absolutely zero, or 0.001.
Right. Wow.
So it's very common with cryptocurrencies, unfortunately. And the last one, which I think is maybe even more prevalent today, is affinity fraud. And maybe you can talk about that.
Yeah, so that's really just kind of the term where if scammers are going after like specific groups, maybe religious or ethnic communities, going into the church and trying to kind of exploit kind of that, like build ties within the community, and then and then kind of bilk them out of their money that way.
I see. Okay.
Kind of thing. Yeah.
So I was more so thinking of like influencers and the like with that affinity.
Yeah, but I guess in the end, that might be
building their own community.
This own version of it. That's right. It's kind of, I think it's kind of almost getting a personal connection now.
Yeah.
And but like the true definition, anyway, from the Ontario Securities website, of what the definition is, was like kind of going after a specific group, or like trying to get a tie in with a specific group. So you might, I think you think of like a church or something like that, and I don't think that's uncommon, to kind of just, because it's trust, right? If you're trying to separate people from their money, it's got to be, you're either going after trust or greed, and I think, or kind of a fear of missing out, or kind of a combination of. Yeah, I think is kind of the recipes there for separating folks from their money. But I think it's. And there was another one you had talked about too. And maybe this is kind of the same thing. Maybe go into different. Your community groups do this, but is with like investment seminars and stuff like that. Yeah. So what's interesting is this is an old scam that back in the days of telemarketing and stuff, or TV advertisements, even you used to have people set up these physical investment seminars where they'd have an exorbitant fee, or maybe it's just a few $100s, but they charge you a relatively high fee. And again, that's their source of revenue, is they're selling this thing to make a bunch of money, and then they promote it and they market it as this, we're going to show you the secrets of how to make a bunch of money. And I've been to one.
Have you? Okay. Yeah. No kidding. What was the seminar?
So my dad is awesome. My dad, like, a lot of everything I've learned, and just kind of grown up with was my dad. And he really liked to kind of be a little bit with hands-on with learning too. And so I was in high school, or maybe just finished high school and just kind of working. I can't remember, but I was starting to get interested in investing and money, and I was asking him a lot of questions. And I can't remember if he saw this ad or I saw this ad, but there was an ad, this talks about how old I am, but in the, in the classifieds, there was this, learn how to trade, learn how to trade. It was like this little thing, and it's like free seminar, and it was at like the Best Western Hotel conference room, and it's like, free refreshments. And I'm, and again, I can't remember if he brought it to my attention or I brought it to his attention. And, I think right now, if like my kid, when they're old enough, they brought that to me, I'd be like, that's a scam, and my dad knew what it was, but he's like, oh, that's interesting. We should go.
Oh, okay.
And I'm thinking, I wonder if he's curious, or I wonder if he thinks it's legitimate, or maybe he wants to get into investing together. But I think he wanted me to see it. Didn't want to kind of taint my view of it, but we go and we sit, and it's a couple of young guys, and they talk about how one was a trader here, one was this, and they've, in my experience, we've learned to read the market, and so we can teach you what we know. And it was the same idea. It was like, for X amount of dollars, we'll, monthly, we'll teach you, we'll mentor you. Well, here's our course, here's our this. And it was purely all this stuff. And we sat through it, and then we drove home, and my dad just asked me kind of like, what did you think? And I was like, well, I was like, if they were that good at this, like, why would they want to teach me, kind of thing. Like, you think, and then, and he's like, yeah, exactly. That's my thought. Like, and he never, so anyway, that was kind of a cool learning experience for me, but
still there to make sure you don't get swindled
he wasn't
or lose
like,
all
he
your
didn't
money.
let me sign up at the end, but he kind of wanted me to draw my own conclusions and see what I thought. And that's what I always thought too.
And that's exactly it. It's the idea that someone is selling the, and it can sound like a wholesome sort of venture of, we'll teach a man to fish, but it's effectively selling this fake idea versus just offering that fake idea or making a living from it. So they're actually making money from the course selling versus just doing the method that they employ. And the reason why I highlight this one specifically is because these days it's a lot, to call them all scams is incorrect also, but online courses are very common in the finance space, and not all of them live up to their messaging, right? And, that's, to have a bad course isn't inherently fraudulent, but the problem is the messaging around these courses, right? I think it's one thing for, say, a influencer to have a course where they say, hey, I've learned to become financially independent. I'm going to share my experience and how I got there and things like that. And if it's all truthful and transparent and honest, I think I wouldn't buy it, but maybe there's nothing wrong with doing that.
Yeah, it's not a scam necessarily. Like, it's kind of buyer beware. You might not be getting the value or what you think you're getting, but
it's maybe that's not the problematic area. What the problem is when they say, I will, with this $500 or I've seen $6,000 course from some influencers, and they sell them at those prices. Like, they make that money. For the $6,000, I will teach you financial independence. You will become financially independent. You'll become very rich. You'll become very wealthy. And naturally, they're hollow promises, right there. And the issue is then there's all these fallbacks of, disclosures where, they go in the fine print and makes no warranties or guarantees.
May not actually happen.
That's right. Yeah. and it's, well, you gave up before you, got there. I can't teach you motivation or whatever. And it's all this stuff. Like, there's all these workarounds for how they back out of the promise when it doesn't work out for you. So you have to be really careful because, again, sort of on the affinity fraud side of it, it's a lot of creators, and really there's a lot of money here. I should really stop working and just sell courses. But there's so much money in building an audience and building this trust, and then going and selling a course. And because with online courses, you make it once and then you just replicate over and over again. And so, it's kind of a gray area where not all courses are scams. It's, I think online courses maybe deservedly have a really bad reputation. I don't think every course out there is bad per se or a scam, but you have to do that cost benefit analysis of what am I paying? Because sometimes it's unreasonable, like, kind of thousands of dollars you should not be buying for an online course. Unless like you're going to go do the CFA or something and become an analyst full time or something. Right. And then you have to, assess the promises being made, and are they honest? Are they too good to be true, and things like that. And what's really tricky about that scam is you can really justify any cost when you're promising financial freedom, right? It's like, well, what's $5,000 if you're going to make millions with the process?
It's pennies to what you'll earn. And I think, and maybe even like going back to this course I went to with my dad, or this kind of seminar, I'm not saying that what it was, like, who knows, maybe in their own brains they thought that they really had all this trading knowledge that they really just genuine, like, they even kind of use that, like, we're really passionate about this. We want other people to have this, and for this kind of fee, we'll, and maybe they really believed it. I don't know. So, I don't even know if there's anything necessarily that fraudulent about it, but some of this stuff, and especially now, I think, with these influencers and that type of stuff, I think that kind of the issue with it, almost, whether it's, meets the definition of fraudulent or not, it's just kind of to, I think, what they're using to sell it. And that a lot of times it's the, look at all the cars and the this and the that, like, they're using.
It's a fake messaging.
Yeah, it's a fake messaging. And even goes back to, and then I think they can take that, for one, it's pretty easy to, you proved it on your, in some of your
$250
videos,
for a car.
You can rent, it's not that hard to get your hands on a great car. And, kind of going back, and we'll talk a lot about, or we'll, talk some of the bigger, better known scams out there, or frauds out there. But, there's the crypto king, right, as the Canadian guy. And I think he kind of got his start, I think, as a influencer with cryptocurrency, and then started, well, I can invest your money for you. And, he kind of, and that's what it was. It was always videos of him on private planes and that kind of stuff. And really, I think he was funding a lot of that with, like it turned out, it was basically a fraud or a Ponzi scheme. So
yeah, it's tough. And so there's different methods. So I mentioned courses, but Discord groups are also a really common one where there's a paid membership for a Discord group. The other kind of catch is someone might offer a free thing, like in your case, a free lecture, but then it always leads to this premiumization of, the next step. And even for the paid courses, one thing that's really frustrating is when you have a paid course where it's, they make this promise of this will give you financial freedom, and then you buy the course, and then it's like, well, the reason you haven't achieved financial freedom is you need our tier up, and that will give you the financial freedom. It's kind of this dragging you along, for the ride, basically. So Discord groups are common, online courses are common, and like I said, not every Discord group or online course is a scam. But the reason why they get such a bad reputation is because there's so many better free resources out there that give you a lot of the time the same information. What's really common, unfortunately, is someone will charge thousands of dollars for what's effectively a Investopedia, course where they go and summarize all the pages of Investopedia. And if you go into it with eyes open and you understand this isn't going to teach me everything to just become a millionaire, but I like how this person talks to me, I like how they communicate, I like their content, and I, believe they're being transparent. Again, I don't see a huge issue with online courses. It's just that cost benefit where you have to consider, well, could I get the same information from a book or a website or
a great podcast
or great YouTube videos, right? Yeah, exactly.
Exactly.
But it's again a gray area where you don't see a lot of a crackdown in the space unless there's an explicit slip up. I know there's one day trading course. He's a creator. I forget his name, but he actually got charged where he had to change his messaging because basically he was promising millions of dollars with his day trading course. Yeah. And in that case, I think it was the Federal Trade Commission actually cracked down and said, this is misleading marketing. But if you don't have that explicit promise or you have that disclaimer somewhere, then that it just barely falls under that threshold where you can continue to do it legally without any sort of challenges.
I think the other thing worth noting too is, and again, this isn't like a blanket statement that every course or every person offering kind of education or training or whatever would do this, but I'll when I talk about kind of my experience and how I kind of discovered a Ponzi scheme and brought it to the Ontario Securities Commission, I first was intrigued because it was actually I saw somebody advertising a trading course.
Right. Yeah.
And so, and there's other examples and there's other ones I've seen out there and actually, I have an experience with somebody who was scammed out of, pretty significant assets on a cryptocurrency one. And, the company, it was purported as this a legitimate company that it went through, but if you go, they were an education company. It was something that you would go to because they offered these courses. You could learn how to trade cryptocurrency. Yeah. And they don't advertise that they do it too, but I think people go to these and say, and it's the same thing. Like they don't go to these things and say, they might have a genuine interest of learning about crypto. And then they go to this thing. It's like, hey, for whatever, $99, I can do a course and learn how to trade and dabble. Yeah. And then you start working with them and then you have a relationship with this firm. And then all of a sudden they're like, we could just do it for you. Yeah. Even though it's not advertised, even though whatever. And then that's kind of, I think sometimes those courses could be a bit of a way in the door. Almost, and you're like, oh, well, I guess if the guy who wrote the course or the person that wrote the course, he might just do it for me. That's even better. Yeah. I'll pay them a little bit. I don't even have to learn this, and they'll give you some promise and stuff. So I think that's something to be aware of too. And
and it always comes back to, and maybe that doesn't help with that situation because in that case they were offering to do it for them. But with a lot of these courses and stuff, you have to ask, if these people are as successful as they say, why are they charging such exorbitant fees for these courses, right? Like, why are they peddling these things so hard to, on YouTube? Like, I always question, like, is someone who claims to have made millions of dollars really going to advertise like a $200 course on YouTube advertisements, like to get some, average Joe Blow, like to buy their online course? Like it just doesn't really meet up. Like, you don't see Bill Gates going around like, selling crappy investing courses on YouTube ads, right? Like people who have actually made it.
How to create your own software, it's...
Yeah, that's right, yeah.
Like I actually remember, I don't even know if this company's still around, but, for years there was always this company advertised on BNN called like VectorVest.
Oh, okay.
And it was this, it was this computer program that showed you the trade signals and this, and successful trades start with this company, and you subscribe to it, and it would tell you based on whatever technical analysis they were doing at the time, that it would give you buy and sell signals. That was the thing. So you paid, so you'd get these buy sell signals that were and obviously they were pretty careful. I think they were careful with their marketing. So it wasn't, I'm not saying by any stretch that it was fraudulent, but it was definitely promising to give you good data in a way, trade data that would help you be a better investor. And I always think to myself, I'm like, well, if I had created this program, if I knew, why would I
just leverage your trades?
What exactly? I would be able to make way more money if I had this foolproof way to trade,
or just sell it to a hedge fund. You could, if you go to a hedge fund and you prove you have this method, they'll pay.
So if there's anything out there, if you create some sort of model or something that will be very successful.
Sell it to a hedge fund. Don't sell on YouTube.
You will make way more money selling it to the smart money in the room than you will for $99 a month, to however many retail investors. So I think
but if you don't have a method, you'll make a lot more money selling it for $99 a month.
It's true. So I think this, kind of part of the message here too is it's okay to kind of approach stuff with a little bit of skepticism and what's really in it for me versus what's really in it for them, and I think that's a good way to go with that. And
I always suggest just start with the free resources out there. Before you hop into it, some people make the argument that paying for a course gives them the motivation. And, I can make that I guess psychologically you can make that argument. But for me, it's there are free online courses out there. There are actually a lot of universities that will have finance resources and free courses you can take. There are YouTube videos. I always highlight Aswath
government agencies and stuff that are really there to promote financial literacy and those types of stuff. There's tons.
A lot of free reasons. So Aswath Damodaran is a NYU
he's great.
Professor. He has free online university courses you can take. So just, there's a lot of free resources out there.
Yeah, he does a lot of great stuff on financial modeling and stuff too. It's fantastic.
He's known as the Dean of Valuation is kind of his nickname. So,
I like him.
Yeah, no, he's great. But so that's kind of, we've talked a lot about kind of the high level examples and maybe rambled for a lot there, but there's a lot of stuff you can talk about. We'll quickly go through some examples. I highlighted here just kind of on the influencer side. There's this guy, Jay Mazini. This is only a couple of years ago, but I mentioned CoffeeZilla. He actually played a role in helping to bring this guy down. But
interesting.
He's interesting because he was allegedly this, again, an online personality. It's kind of that perfect example of a finfluencer and an affinity scam or fraud, where they're this successful online influencer. They have all these videos of them handing out wads of cash to people in need or going to a Walmart and just giving a bunch of money away. But in reality, he was messaging followers for money, asking for loans from followers. And so he had this trust he had built. And what's really crappy about the situation is he was in particular tapping into the Muslim community and, saying trust me, I'm, on God, basically, I'll pay this back and I'll pay you more than what you gave me. Right. I just need a loan or whatever. Or at times he was promising to pay above market price for Bitcoin and stuff like that. He had all these weird, and it just seemed unnecessary because he seemingly had a lot of money.
Right.
But, just for whatever reason, whether it was mental or some other reason, was scamming his followers. And that's a really crappy case where you have this trust that's been built. And again, affinity, when it's community specific and taking advantage of people. So that's kind of a more obscure one. But then there's, of course, people like Bernie Madoff, which most people have heard the name, but maybe don't know the story of Bernie Madoff. So you can maybe touch on that.
Yeah, well, I mean, I think the thing about Bernie Madoff is, everybody knows the name, or most people know the name, and know probably the best known Ponzi scheme, I'd say. Just because it's
maybe one of the most successful,
probably the most successful, and just because of the sheer size. I read a really good book actually just recently. I can't remember what it's called, but it's by a guy named Harry Markopolos, and so he was actually the whistleblower behind Bernie Madoff. Right. But he even opens his book by saying, it kind of calls himself, I think, the world's least successful whistleblower in that case, because he wasn't able to bring down Bernie Madoff. And so he had been reporting to, so it's all, the book's by him, written by him, and it's kind of his story behind that. And what's fascinating is that Harry was like a derivatives trader, a derivatives portfolio manager. He's a quant, like a real smart math guy.
Yep.
And he was kind of introduced to Bernie Madoff's fund, which, and I won't get into it, but it was essentially kind of like a off-book hedge fund really in the end. There's a whole bunch of regulatory kind of gray area stuff there too. But this guy Harry at his firm that he was at the time, he was charged with trying to create kind of a new product, and they were, using derivatives. I won't even get into it, but they were looking at kind of outside managers or funds to kind of wrap into some sort of kind of fund of funds. Mm-hmm. And somebody had brought forward some marketing material of this fund, which turned out to be the Bernie Madoff's fund. And so this guy Harry, he said, like, he kind of was running the numbers and looking at the material, and the material was like, well, it uses this certain spread strategy, collar strategy, I can't remember what it was called exactly. And it wasn't some brand new kind of thing. It was a well-known strategy. And he looked at the historical returns that this fund had and looked at the strategy and was just like, this is impossible.
Right.
Like right away. So it's just, it's not possible. It's not humanly possible.
And it wasn't anything. It was like above 20% or something.
It was literally, it was 20%, and it was like over the course of whatever, he had like 2 down months, and a down month would be like down minus 0.01 or something. Right, like it was, and that's, I mean, just in general, like, I mean, I've watched a lot of episodes of American Greed. I've watched like, I was reading, there's a kind of, can touch on another kind of famous Canadian Ponzi scheme that's kind of just unraveled fairly recently in Canada. It was like $300 and some million. The guy's still on the run. It's pretty interesting actually too. But the thing about all these Ponzi schemes is it's not like, okay, so let's just say kind of average market returns like 6-8%. Yeah. And that's what an investor wants. The Ponzi schemes out there, they're not like, okay, well, let's promise 10%. It's like 20, 30, like it's not,
it's not 1,000% maybe, but
no, but it's still like it's
a good chunk.
It's a good, it's pretty significant. But yeah, so I think he was kind of averaging, and what it was is, I think mostly was, it's not just that it was above market return, but it wasn't even just that, because there was times where it would be purportedly performing a little less than the market, right, when the markets are really roaring. But it was a steadiness. It was like 20% per year in all markets, right, at all times, no matter what. And so he kind of said, well, there's just no way. Like with this strategy, it's just impossible. Mm-hmm. And so he kind of started doing his own like investigation kind of on the side of it. Long story short, he, over the course of 9 years, he had, I think, 6 different submissions to the SEC. Right. Raising all these different red flags. He ended up having kind of this team of coworkers and other friends who were interested in it too, and they were like researching it all on the side, and they kept bringing it towards the SEC, and the SEC was just like, no, kind of, they ignored for a while, because basically, I think the big thing, and this talks a little bit about kind of influence, is that Bernie Madoff wasn't just some guy. Joe Blow, he was like one of the founders of the NASDAQ, and he had a legitimate brokerage, like a market maker that was well known. Like he was a very well known guy, and so there was some people that said, like, and kind of in hindsight, I think they looked and said, well, a lot of people who were even investing, and a lot of the investors were like things like the Dubai wealth fund and stuff, and then like it was lots of like billions and billions and billions of dollars. They all, there was a lot in hindsight were like, yeah, we kind of felt something sketchy might be going on, right, but not to the point that it was a Ponzi scheme. I think, a lot of people in hindsight were like, well, no, he's probably front running, which is, because he's got a legitimate brokerage that's doing,
which you probably don't mind if you're a client.
Yeah, if you're a client, you're like, well, right, he's not getting caught. And I think in the time too, this was kind of pre-financial crisis. I think the regulations might have, I think people just assumed in a way that, he was
with front running. Just to clarify for anyone who's not aware, front running is when there's a trade that's going to happen, and you're able to get your trade in beforehand to take advantage of it. That's right, as the name suggests.
Yeah, exactly. And I think because he had this legitimate brokerage who was a market maker, meaning they were actually making market in certain stocks, that if they would, he would have access to that information. They would have access to it, and it's illegal to do, but it was especially at the time. From what my reading is, even though it was illegal, it was kind of like well known. It's just unspoken. And people, it was kind of unspoken that it was like, well, he's just front running, and I'll happily invest if he's not getting caught, kind of thing. But there was other red flags that this whistleblower had found that were just, and when you read the book and you see all of them, you're like, you can't fathom how this went on for that long, and that how this whole big government agency whose like sole purpose is to protect investors were like.
But and part of it's probably that herding aspect too. When you see Dubai and these sovereign wealth funds invest,
there's a lot of legitimacy behind it, and follow the money. But I think there's a couple of the red flags that he brought up. One was, okay, well, here's the strategy. The strategy's this, and he finds all this marketing material. And one of them was like, we use these certain type of options to, and so he had gathered about, they had actually done some investigation, but because it wasn't like a properly operated hedge fund, it was, there wasn't a lot of data on exactly how much money he was managing. So, but they gathered it by talking to different firms, and they kind of estimate at the time when he first found them, he estimated at the time he felt they were managing like $4 to $6 billion.
Wow. Yeah.
And so he said, if they're managing $4 to $6 billion and they're using this specific type of option and they're hedging it this way and whatever, he's like, I'd estimate they'd need this amount of options contracts. Based on that amount of capital, there's not enough option contracts in the world,
because you can see buying and selling activity of
and he's like,
other contracts.
You can see the option. There's not enough option contracts to even do what he's saying he does for the amount of money they do it.
Interesting. Okay, yeah.
So he had that kind of stuff. Plus, they talked about certain like trades they would do and stuff like that, and he would have like market data that would show like, well, but if he would talk to traders and say, well, if he's managing $6 billion and he's buying and selling, because he would talk about in the strategy how they just use kind of basic companies and talk about some of the companies and trades they do. And, they were to their investors giving out kind of fake trade tickets because trades weren't actually happening. And he was able to show that like, well, if they were buying and selling this much, it would be moving the market. And like just all these little red flags. And he's sending this report after report. It's like, so over the course of 9 years, I think it was 6 different kind of like full reports to the SEC. And kind of near the end of that process, SEC begrudgingly finally was like, okay, fine. They opened an investigation. They investigated him for 2 years. And then like, we're like, okay, no, he's clean. It's all good.
Right. Which is crazy.
And like all this stuff came out, and like they had to go before Senate and everything. So all this kind of stuff came out in hindsight. That the investigators did obviously a very poor job. Like they didn't even confirm trades were happening. Like that's the thing. Like trades weren't happening.
Yeah.
So
seems very
all they
easy
would have needed
confirm,
to do was like actually confirm, like get trading logs.
You said this happened. Like,
get here's the give us some of your trading logs. Like we're an auditor, they're an auditor. They have the right to get that information. Get the trading logs. And there is a certain data feed where they can actually like match and see, and they'd be like, well, no trades actually happened on that day, or there wasn't the volume on that day that they're saying. They would have been able to. And I think the scary thing about it is, their sad thing or whatever, is that, they estimated that Madoff was managing like $4 to $6 billion, which is still a big amount of money when it first came across this guy's desk, and he first brought it to SEC's attention. And the thing is it still had nothing to do with this guy when Madoff actually got caught. Right. Because basically what happened was the financial collapse happened in 2008. Markets were going down. Enough people started pulling their money out that he ended up knowing he just couldn't go on, and he turned himself in. And so all this work this guy did over 9 years did nothing. It was just
that's crazy.
It was just the market forces that finally brought him down. But by that point, and I think I can't remember I can even bring up the number, but I don't want to. I think it was. I can't remember now. Yeah, so it's like $20 billion-ish dollars, I think they're estimating.
Yeah.
And it's still not even well known, like super well known, because there's a lot of
obscurity, I'm sure.
Like there's even some talks that some of it was not the most legitimate money, like like mob money and stuff like that over in Europe and stuff. And so like but because the SEC and because the regulators just ignored this guy, more billions and billions and billions of dollars more were lost to this.
Yeah, that's it's crazy because you hear the story and you hear about Bernie Madoff but I guess you don't realize.
I knew all about it. I didn't know the scale. I didn't really know the scale.
Right.
Until you really read it and put it in scale, and then and I think a lot of people too thought, well, it's mostly institutional money. It's mostly this. It's this. But he was also like kind of going to affinity fraud to like I believe he was Jewish, but I know he really went there was a lot of like individual in the Jewish community and stuff. Like there was talks of that in the book, and
because the sovereign wealth fund wasn't enough.
Yeah, exactly.
So
it's anyway. It's a fantastic book.
Okay,
I can't remember exactly.
I'll put a link. We'll find
Harry
it after the
Markopolos.
fact,
It was a fascinating book, and a big part of the book too isn't just like talking about all of that. The kind of second half of the book is really like kind of going after the SEC and being like, how can
drain them?
Like seriously, it was his sole mission in life after that became like he's like, well, I couldn't stop Bernie Madoff, but I'm gonna shed light on how.
Well, good for him.
Yeah, it's really cool. It's a really, really interesting book. So
I didn't mention it, but the J. Mazini, much smaller operation, but he allegedly defrauded people. Not allegedly, I guess he was so he's in prison for 7 years, I think, but 8 million. So much smaller scale. He was also individuals on social media. So, a few $1,000s here and there. So, so that's kind of one of the well-known stories. But what's funny is Derek and I, we talked about it. We both actually have experience in a way, you more so than me, with seeing sort of, for me, gray market or sketchy activity in the stock investing space. And for you, with actually bringing down a legitimate, well, not legitimate, an actual Ponzi scheme.
That was proven,
in charge.
And you can go online and you can find
And does it have your name? Any credit?
No, there is. I read the report again. Like I still have, maybe I'll tell the whole story now.
Go ahead.
Right. Okay. It's kind of a funny start, to be honest.
Okay.
I'm always just kind of fascinated by things, and being in our profession, when I see stuff that just kind of looks sketchy or just more so just out of interest because I think it's funny.
Right.
I just kind of pay attention, and I end up kind of going down a rabbit hole and reading. But I was, it was probably 2012, 2013. Okay. So let's just say a decade or so ago.
Yeah. You were already working.
I was already working.
Advisor.
I wasn't with our firm, but I was with another advisor at the time.
Yeah.
And I was actually grocery shopping at a local grocery store by my house. And, they have those community boards kind of at the exit where people post babysitting service and, yogas and dog walking and stuff. And I'm walking by and I see this big one and it's like Black Panther trading. I don't know. Yeah, I'm sure name. I can say. Yeah, I know. And I Googled that there's some other videos now with Black Panther trading and stuff. They're not related. So I don't want to
throw them under the bus.
They may be legitimate, illegitimate. I don't know.
But it's
this Black Panther trading doesn't exist anymore. But it's like Black Panther trading, learn to trade, and it was like foreign exchange. This was well before cryptocurrency, but foreign exchange, stocks, commodities, learn to trade it all from one of the Canada's most well-known experts.
Right.
And then it was you take the little rip-off thing with the phone number, and I'm I just thought it was hilarious.
So right away you were.
I wasn't like, oh, this is a scam. I'm thinking this is hilarious. Somebody is so good at trading stocks.
He's going to put advertising the local grocery store.
Local grocery store. And I thought it was funny. So I took the thing, and I'm not going to contact the guy or anything, but I just, start going home. I had some free time one night, and I start Googling all about this Black Panther trading and this guy. And kind of interesting, actually. His first name was Charles. So Charles Ponzi. This guy's name was Charles.
There you go. Yeah. The signs were there.
Yeah. So I found his website, and it's this bio. It's I've been in the market trading, for 20 years, and I've achieved education and credentials that most people only dream of. And it was he had a CSE, a Canadian Security course, which is the entry level course. Yeah. No anything else.
It is CFA. Legitimate, but it is
legitimate.
It's
but
what most advisors enter the field with.
Yeah, to be licensed to trade, that's the minimum level.
Requirement,
you need there's investment funds course if you want to sell mutual funds in Canada, but to sell to be a broker, you need your CSE course. That's your minimum licensing course. It's not a credential.
Yeah,
it's a course, licensing course. Yeah. I've been cheated by this, and I'm an expert in whatever. And it was just I was this is funny, and so we talk, you see all these videos online now about, people are showing their wealth.
Yeah.
And, they're there with their Ferraris and whatever.
Grocery store.
Yeah. But on his website, he had this website. So for one, the first picture was him in a Black Panther, I don't even think it was black actually, or maybe it was, but it was a Black Panther outfit.
Oh, okay.
like a mascot. Yeah.
Oh, no,
yeah. Like it was.
Oh, wow.
It was like him in this thing and like holding the giant Black Panther thing. Like, and I'm like, oh my gosh, this guy's a marketing genius.
Yeah, that's right. You gotta give him credit when it's due. Yeah.
And then it's like, so that's whatever. And then it's like, okay, you're scrolling down about him, and I'm like, he's trying to show how he was flashing his wealth. Like everybody else shows their private planes and they show this. Well, him is sitting on the hood of like a 2000 Chrysler Sebring convertible.
Oh, nice. Yeah. Best trader in Canada. But yeah.
So anyway, but the whole website was just about, he had this, for $500 you could get his trading course, and he would send you the manuals and teach you. You could trade anything because his proven methods, he will make you. And I was like, this is kind of sketchy. Anyway, just some Googling, but what ended up triggering it for me was, and none of this was on his actual website, but I just was like in my Google searching of Black Panther trading, came up a Kijiji ad. And I found this Kijiji ad from him for Black Panther trading with his website, where he was offering GIC-like investments.
Ooh,
and it was this thing, it was like where if you invest, he will give you a promissory note, which and he's guaranteeing 20% returns annually.
Like a guaranteed
and it said it's like as safe as it's like a GIC at the bank.
Yikes! Yeah.
And it was like I was like, oh, it went from being like, this guy's hilarious to being like, oh my gosh,
that's
like this is
so a guaranteed investment certificate, Canadian.
It's like a term deposit, or a CD, like a certificate
like a CD
deposit
in the US, but something that's backed by a bank where they guarantee, as the name implies, they guarantee a return.
Yeah. So it's as safe as you can get, really, because it's
from a bank,
and it's from the bank. It's covered by a Canadian deposit insurance company and everything, and I was like, whoa, and it was basically like, it was like, if you give me your money, I will give you a promissory note that says I will pay it back plus your 20% annually, and it's guaranteed, just
backed
like
by the Black Panther
mascot. That's the collateral.
Yeah.
It's the Chrysler Sebring convertible.
Yeah, that and the Panther.
I shouldn't laugh because people actually lost money from this guy, but it went from being like, oh my gosh, this is funny, like I'm having a good time, kind of almost making fun of this guy, to being like, okay, this is not, I know this is against the law. Like in the end, even if he is able to somehow do 20%, if you, I know from securities regulation, like if you guarantee return, even if he could do it, unless he is backed, unless he is offering a guarantee, like even that alone, I was like, okay. So Ontario Securities Commission, which is our regulator in Canada, each province has its own regulator. So they have a tip line. So I took screenshots. I found some other stuff, like some pamphlets and stuff that he had, whatever. And I just wrote into this tip line and said, here's my information. This is what I found. Here's the website. Here's a snapshot of the Kijiji ad, and here's all this information. Like, and I just said same thing. Like A, I just don't think this can be real. B, he's offering guaranteed returns, and I know that's not right. And so I end up getting a couple weeks later kind of an email from an enforcement officer being like, thank you for this tip. Just to let you know, we've decided, we are opening an investigation. Thank you for that. Since it's going to be an active investigation, we can't communicate with you. We won't update you.
Right.
And then that was it. That's all I heard. And then I think it was maybe 2 years later, I get a random email from the same investigator or agent or whatever. And it was just like, hey, just to let you know, the investigation is closed and here's the outcome. And then they sent me the link to the enforcement action.
Right.
And
was the guy arrested, or was it just
I can't find if he, it was because the OSC can arrest. So, and then it's up to them to take it to the RCMP, and then for the RCMP to charge. And I don't know, I actually should have checked to see if that ever got to that point, but he was charged and it was found to be, and it wasn't just, he was whatever. And it was found I don't know if we're allowed to link the OSC because it's publicly available. We can link the case. It's pretty interesting if you actually read the details.
I'm just thinking of Derek when you
think of me. Yeah,
this guy's behind it. Yeah,
with me and my cape behind.
Yeah, that's right. Yeah.
But it's so in the end, I think he ended up getting about $500,000 from investors.
Oh, okay.
Or from people.
It's pretty good
investing.
for a grocery store.
Yeah. And it was found that essentially none of it was invested.
Oh, okay.
And it was used to like, they talk about in this whole enforcement action, like cause they do the full audit investigation, how like some of it was like to pay his spouse's credit card bills and this and that. Yeah. And his probably big loan payment on the Chrysler Sebring convertible.
That's right. Yeah.
But, so, I mean, he was found guilty. It's a really, you know, they do a really good job kind of explaining the whole thing.
That's good, yeah.
You know, they even have in the enforcement action or the whole report, like it's a big legal document that shows all the evidence was brought forth. And they had 3 of the investors kind of come in and they shared some of the stuff, like, you know, he had a pamphlet called the 20% solution. That was what it was. And he had all this stuff. But they found that, none of the money, you know, or very little of it was actually ever invested.
Right.
And it was just gone to pay other stuff and pay other investors back. So it purely met the definition of a Ponzi scheme. Yeah. And I like to think that, and I think they talk about kind of some of the stuff, and I think other people had kind of brought stuff forward. So I'm not taking full credit like that it was, but I know, and then they're talking about kind of the, in the evidence that was brought forth, part of the marketing materials and stuff, like they brought forward, they talk about how in the active investigation, the investigator followed the Kijiji ad and contacted him and asked, like pretending to be an investor and asked for it. And he was, you know, sent him emails promising him this and caught him red-handed. And then it talked about how he had been, like, in the thing, there's a little footnote. It's like, and he had been advertising in a local grocery store. So it's like right in the report. I'm like,
that's your footnote. That's that you contributed. That's great. Yeah.
So, but in the end, like, you know, and I think, like, you know, it still took a couple of years for them to investigate and bring him down and all that stuff. But it, you know, I like to think that if it wasn't noticed by me and I think other people, you know, who knows? Like it was still, I mean, people were like, they talk, and you have to think, I think probably the type of investor or somebody who would be like coming to meet someone like this through a grocery store ad or a Kijiji ad probably isn't, you know, maybe not the most sophisticated investor.
Yeah.
And probably, you know, and they talk, and even I think the couple of the people they had interviewed or had used as evidence or you know, were witnesses against this guy. You know, they had invested, you know, 15, 20, whatever, but talked about how that was their entire life savings and how it's all gone, right? Yeah. And so you don't have to lose $1 million to have it completely significantly
destroy your financial situation,
right? And so it's not the scale; it's still
it's a relative impact.
Yeah. So it's
crazy. You know, you hear 500,000, and again, like in this grand, you think of Bernie Madoff, it probably sounds
nothing,
like nothing, but it's still a lot of money for the local grocery store, you know, shoppers and stuff. So it's quite a shame. And so in my own experience, I won't take too long because it's not as fascinating as that, and it's not as illegal either. But there's a video I put together not too long ago where it was the topic of discussion was stock promotions on YouTube. So
we've talked a lot about, like, you know, when you were investigating all this stuff, like you were telling me a lot.
I was asking you if I should go see a lawyer.
Yeah,
stuff,
I know.
Which I did. Because it was a I don't know how to describe it, but I was actively naming a lot of names, I guess, of both companies and creators. And really the crux of the video was there are creators out there who are being paid to promote individual stocks as attractive investments, which itself is not illegal. But the problem is the methodology for promoting. So there are actually explicit disclosure requirements in the US and in some provinces in Canada, I believe. I think British Columbia proposed some legislation. I don't know if it went through or not. There are actually requirements to disclose how much you're paid when it's a stock promotion. So when you're promoted or sponsored by like HelloFresh or whatever, I don't believe there's any requirement to disclose, well, I was paid $2,000 for the sponsored message. But that is actually required with stock promotions because it's a higher degree of scrutiny. So you have to disclose how much you were paid, the method of payment, whether it was stocks, if you own any of the stock that you're promoting. Like there's all these requirements as you would expect because there's a lot of conflicts of interest when you're promoting a financial instrument. And the problem is a lot of these creators weren't checking all those boxes with their disclosures or not being upfront with them. There'd be like a hidden link to a document that would have all those disclosures, but nothing in the video. There's some videos where they don't even highlight it's a sponsored video. They just say, I really like this stock and I really like this company and here's why it's attractive.
So
they don't even mention that they're being paid
even though they're
for this
supposed
message.
to.
They're supposed to, but they don't disclose it.
So it's like any regulation, I guess. Like some people kind of
skirt that
do the
line.
minimum or use the real small fine print. Some people just ignore it altogether, and some people might.
So that's a very common issue, and it's a gray area issue where there's not a lot of enforcement right now, but it's still technically not legal to not have the right disclosures. But the other issue, which I found even more fascinating, was the quality of the actual stocks that were paying for these promotions was crazy. I found all these interesting things. So a lot of them were mining exploration companies in Canada. That's even for U.S. creators, a lot of them were Canadian companies. And what I found is that a lot of these companies were businesses that had no revenue. So they weren't selling anything. They had nothing to sustain them outside of investor funds. So first of all, that's a huge red flag of, well, why is this company promoting to random people on YouTube when they don't even have a business effectively? Their business model is, well, we own a plot of land and we're hoping there's gold or silver in here. And, they have some expenses, but the other thing is when you look at their income statements, their largest expenses in many cases, not always, there were some that spent, tens of millions on exploration.
Stock promotion,
exactly. Marketing and things like that. And I've come to learn that there's actually a term called lifestyle company, which a lot of these companies appear to be or might appear to be, which is effectively the executives of the companies are using this to pay their salary. So they're called lifestyle company because investor dollars are funding the lifestyle of the executives. So it's really crazy where you see these YouTubers and, I see some, they'll use terms like, I asked this company to promote my stock to promote this video because once I saw what they were doing, I wanted them to sponsor my video. It's like, all right,
and I'm sure if you asked that person what that company does, they wouldn't be able to tell, right?
Or how much money they made last year, which is zero, by the way. And it's funny, like there are some creators, it was like all 7 of the last sponsorships were the exact same messaging and exact same quality of company with $0 in their name. And what's interesting is I also reported some of these to the regulators, but the problem is so many of them are in that gray area where there was no action taken. There's one outstanding, I think that's still pending, which I don't want to give any details on, but that's kind of an area that shows why you have to be careful, especially with influencers and that trust that they build, because you build this trust and then they say, hey, by the way, I really like this one stock. Well, money can really make you say anything apparently online. So, the moment you see evidence of a paid promotion or something, you should really almost discount anything they say with that consideration.
I mean, using influencers to get people to buy stuff is, something as old as time, but if some celebrity tells me to buy shampoo and it just doesn't work,
well,
that's it, right?
And that's on them, right? If they promote something and that product is not good quality, like in the case of these stocks, that's on them. That hurts their brand, and they deserve the backlash they get for it, in my opinion.
But the risk to you as the consumer if you buy bad shampoo, unless it's, what was that stuff that was being sold online, but that famous guy turned out was making people lose their hair.
Oh, I don't know.
What was it? Anyway, someone I'm sure will put it in the comments.
Some sort of celebrity or something?
It was it was some famous hairstylist to the stars named Thad or something, and he had this whatever, but it turned and it was pretty much it was, but it was I think it was more like a subscription based kind of one, and it was really, really expensive, and then people were losing their hair or it was causing scalp damage, but
that's wild.
But there's way more at stake here because you're not just losing bad shampoo or something.
Or your hair.
Your hair.
It'll grow back.
Yeah, it'll grow back. Hopefully.
Yeah. But and that's the issue, right? And that's what this video I really was harping on, was the fact that this isn't a HelloFresh kit. If your HelloFresh kit comes with bad food, that sucks, but it's maybe $20, $30 that you're down. This is their life savings might be going into the stock. And these creators claim to be analysts and the like. So when they promote something, a lot of their viewers assume, well, they must have vetted it. They must have assumed. And then you
have this
$0 revenue.
It's assumed authority, right? Or this knowledge. It's
well,
I'm on YouTube.
And I have a following.
Everybody on YouTube is super smart. I have a following, so I have this authority to tell you this is a good investment.
And what's really crazy, the thing that really blew my mind as I was looking into this, is I found out that I started looking at the directors, the executives, and the head office of these companies. And I found that like several of these companies would have the same head office in a certain block in Vancouver. So it turned out that these companies didn't even have a head office. What they were doing is they were using a law firm that had helped them go public as their head office because they had no assets. They had nothing to their name effectively outside of this plot of land. So that was kind of the moment where I was like, I need to dig into this because there's something. So anyway, I'll leave the link to that video if you want. It's a really interesting video. Yeah. I'm quite proud of it. It's
led to a lot of good discussions too, even in the office.
That's right,
We've had some. I learned a lot.
Kind of another funny thing where you look into and you just kind of laugh at how ridiculous some of it is. Like when you zoom out and see how things are. And there's stuff like companies paying for a promotion on YouTube and then a week later issuing more stock at a higher price because the YouTube video pumped up the stock price. Like it's pretty ridiculous.
Because and we should, if I was even thinking about it, I say it because you're thinking, well, these lifestyle companies, like, well, how do they, these stocks are traded on the secondary market. So how does it make them? But that's it, right? They're trying to keep the valuation high because they probably
they issue more shares.
So they issue more shares, which brings more. That's how they do it. Like you're not gonna if your company's actually worthless and your shares are worth 0.01 cent, you can issue as many shares as you want. You're not actually raising more capital for your company, so they have to artificially inflate, the share price, so that they can issue more at that higher share price and try to kind of keep the dream alive.
That's right, yeah. But according to all of them, like they're just on the cusp of a big discovery. So maybe next.
I think it's that because I think it's been going on for because I think
it's not a new term.
It's not a new term, and I think the precursor to these paid YouTube and influencer stuff is kind of a lot of like, and again, not all of them I'm sure are bad, but like there was a lot of like. Especially early when I started my career, it's like these investor newsletters and these kind of things. And it was the same thing, like these analysts with these hot stock kind of newsletters, but they were all these kind of junior venture mining companies, and they all seem to trade on the venture exchange and headquartered out of Vancouver. It's pretty known for being a bit.
The Canadian, and unfortunately, the reason why a lot of these stocks are Canadian is because they're trading on the Toronto Venture Stock Exchange or Venture TSX.
But it used to be in Vancouver, I think.
It used to be in Vancouver, that's right. Vancouver, and Vancouver's kind of known, unfortunately, for money laundering and financial crimes. But
weird,
So the reason is Vancouver used to be a finance hub and used to be a place with the Vancouver Stock Exchange, which kind of went down as a very bad place for stocks because there's just a lot of, it was a Wild West, And now today, that's kind of the Toronto Stock Venture Exchange. So the reason why a lot of these companies they're not all based in Canada, but the reason why they still list in Canada is because there's seemingly less barrier to entering the Toronto Stock Venture. I'm messing up the name. I know Venture's in there somewhere. But the TSX Venture TSX, there's fewer barriers to enter there than in the US. And you still get access to the U.S. market because, yes, you're Canadian, but you sell an OTC U.S. listing and you claim to trade in, gives an air of authority or legality or, officialness to it. But those are some kind of examples that we've had experience with. We'll try to, we've been going on for a bit. There's a lot of talk about it. And it's fascinating. I really do like this aspect. I'm not full CoffeeZilla type where I can spend my life dedicated to it, but whenever something like this comes up, I really like to dig into the details. But
so there's a ton of good books. So I think you could educate yourself. Not only is it like there's entertainment value in a way, like I read the book about Theranos and that stuff. And there was the other book I read was on the, what's that? It was like the Tesla, the semi trucks for Tesla.
What was the name? It starts with an N, I think.
Yeah.
But I know which one. It's an electric car company that didn't work.
Their whole thing was created for semi trucks, and they again raised billions of dollars, and it was again I think there was an intent. Because it's the same thing, I think like it sounds like Theranos was like there was intent and it was kind of like reach for the stars and we'll try to make it work. And then when it didn't, we had to kind of
fill in the gaps
and it was just piecemeal. But they still were selling a certain kind of dream that wasn't actually a reality. Mm-hmm. And the semi truck one was the same kind of thing. Like it was
so it was a promotional video where they actually rolled
because it was
the semi truck down a hill because it didn't work.
They're like, but that's what they're actually. And they're trying to raise more capital. That was a proof of concept. Like, we have a truck that works,
that rolls down,
but it was like a chassis of a with nothing in it. They found they searched all over to find a road with enough grade
to let it move
would make it move, but not so much grade that you couldn't tell in the video. Like that's how much research that they went in to do to make sure they could do this kind of video. But and you're like, oh, that's smoke and mirrors and whatever. But if you're trying to get people to invest in your company and saying, well, we have this working model.
Yeah.
Like that's what people are investing based on your word. They have this working model and here's this video evidence. Well, if that video evidence is actually fraudulent, like that's it's illegal. But
and that's what's tough is and there's another book. I would say it's a great book, but it's a really hard read actually, but it's Easy Prey Investors. It's a Canadian book.
Okay.
But it's about how companies use accounting rules to fudge the numbers a little bit. And those frauds are naturally going to be harder to catch, right? When you're investing, if things are legally following the methods that they're supposed to and they're audited properly, even through official channels, you can be defrauded of money. And there's not much you can do if the information you're being given is just blatantly incorrect and difficult to detect. So those are some examples of direct experiences we've had anyway with the space. And, it's unfortunate that even I would say an everyday kind of advisor or typical advisor might run across these types of scams in their lifetime and have more and see the experience with it. And when it comes to, it's unfortunate when companies just blatantly lie about what they're doing. There's not a tremendous amount of stuff you can do outside of applying scrutiny to it. But there are some general tips that will, at the very least, increase that threshold and insulate you from kind of the worst perpetrators of these frauds and ways to protect yourself from the more obvious scams and the like. First one, which is very common, is the being pressured to act in the moment or now. Unfortunately, with our industry, that's a very common, easy one to, there's a current opportunity
don't want to miss out.
Markets. That's right. You don't want to miss out. But a lot of the time that's a tactic to almost overwhelm you or prevent you from thinking too much or rationalizing stuff or researching stuff after the fact. To your point, kind of different, but there was a multi-level marketing cable company that I went to a meeting not knowing what it was at one point. This was before my first job. This was in high school. And I think they were at the end of the meeting, after they give their spiel of you pay $500 in and then you go and sell internet to your friends and family.
Right.
And they're like, what do you think? And I was like, well, I'm going to do some research. And they're like, okay, well, don't believe everything you read online. It's like, all right.
Red flag.
Yeah, exactly. So first thing, it's okay to take your time.
Yeah.
If something's an amazing opportunity, yes, there are day-to-day trades, but a good investment tends to stay a good investment for a long period of time.
Yeah.
You can certainly take the couple of hours or days to figure stuff out. If you're not at the desk day trader or something, there's not often a reason that you should be pressured to that extent. Eric, the next one's pretty easy, but you can,
I think, so a red flag obviously or something to watch for is if you're promised like high returns with low risk, and especially
probably the biggest one.
I think that's the biggest one. And I like I said, I think like if you watch American Greed and if you look for a commonality in almost every one of these, especially Ponzi schemes, it's just the returns that are being promised. Yeah. And I guess maybe for us who are like actively, I think fairly well-educated, experienced professional who try to make a living, or I guess who do make a living, I shouldn't say try to make a living, but
scraping by,
who do make our living, trying to do what we can to make our clients' financial futures as best as they can be, by balancing risk and return. But like, we know what's the market can give and what it can't and stuff. So I think maybe it's more obvious for me, but when I'm seeing these things and I'm seeing like 20%, 30%, like, it to me, it's just so outlandish. Like that would be just okay, well, it's just
very
not possible,
clearly, scam,
and you'd have to wonder, like, why me then? Like, why is this exclusive offer just for me? Like everybody, if it was that easy, every single person in the world would just do that strategy then. Like why would there be anything other than that strategy if somebody could consistently earn that while taking no risk? Like that's not how life works.
That was a big thing a few years ago with cryptocurrency was, and we saw the utter collapse of that with FTX, but it was really common where you had, Anchor Protocol was one that came to mind, where they would have these sort of deposit accounts that promised an 8% and in Anchor's case, a 20% annual return just for staking a cryptocurrency or basically depositing money with them. And, the argument was it's cryptocurrency. You just don't understand it. And this 8% or 20% it makes sense in this system, but it's, when you have this return that's so much above the rest of the market where, at the time, in Canada, like a savings account was paying, I think, under 1%. So it's like, under 1%, 8% to 20%, a guaranteed rate.
No risk,
And there's this funny TikTok of this guy telling you how you can buy use this save anchor 20% return to buy a mansion, or if you just invested this anchor protocol and buy this mortgage, you can fund your mortgage with this 20% return and all this. Like, it was, not great financial advice in hindsight.
Yeah,
because what happened is that yield collapsed. Like, at a certain point, they couldn't offer it anymore, and it might have even been, I don't know what happened with anchor protocol, but all to say that if the return's very high, usually that should be a massive red flag.
Yeah, and it usually is combined with it's this high and you're not taking any more risk than you would at the bank.
Right.
Or it's and actually, like, to go back to Black Panther trading, they talk about, because when they're trying to show all the essentially illegal stuff is going on.
Yeah.
Obviously the biggest issue is stealing people's money and saying you're going to invest it and then paying your credit card off with it. But they were even talking about how, even some in his marketing material saying, well, it's like same as a GIC at a bank. So he was that same thing. It was, well, I'm giving you 20% per year, plus it's essentially a guaranteed investment like your bank. And even talked about, and this goes to another one is and just without going too much detail, like, if you invest with us, and we're not soliciting here, but like at our firm, we're a good sized firm. We've been around for 20 years, but we don't have custody over our clients' assets.
Right. Yeah.
We have a custodian, which is a scheduled bank, has a custodial arm. So we never have access. We have authority. We trade and we build the portfolios but
it's not going to Derek's.
You're not writing. If you're investing, if you're coming to invest and would like to invest with you, it's not okay. Great, just write a check to Derek or to Richard or to the Dead on the Money podcast investment fund.
To one of the big banks of Canada.
It's to one of the big banks of Canada, and so you have that level of protection. So when they say, oh, you're protected by this, but with Black Panther trading, and this is, I think, common with a lot of it, how he was investing the funds is it was either he even said your money will be put into the Black Panther trading corporate account and then invested from there. And the Black Panther account is held at a bank, so it is CDIC insured.
Oh, jeez. Yeah.
It was,
and that was,
and then what he would encourage you to do is,
my personal account is also CDIC insured.
So if you transfer us money, it's CDIC insured.
Yeah. Just like FDIC in the US,
But they would say, or he would ask you to open an investment account and give him trading authority on it, or something like that. Like, so those are types of kind of red flags too. Like, so if you're ever asked, if you're looking and there's an investment and you're asked to like do something kind of out of the ordinary,
any workaround,
and that was I know there's one with cryptocurrency where it's like, oh, you go open this account and then you give me authority or give me your password, or you transfer me money or my account money, or you buy this cryptocurrency, send it to me, then I'll invest it because of this, whatever. If there's a workaround or iTunes gift cards, that. So those are the types of red flags. Like, you'd have to, like, if it's a legitimate organization, you won't have to do those kind of workarounds. Yeah. And so really making sure, like, and those are great questions to ask any kind of advisor or potential investment or anything. Like, why,
where's the money held?
Where's the money
held?
Process, because you really,
and what are the protections? Like, and that's another thing is we mentioned the CDIC. So for those unaware, in Canada and the US as well, both on the cash deposit side and actual investment custody side, there are insurance programs in place. And there's so many abbreviations.
It's the Canadian Investor
CIPF,
Protection, CIPF, Canadian Investor Protection Fund. But knowing that just protects, like, so with us, if our custodian, if they, even though they're a tier 1 bank, like, if whatever happens, the funds within that are protected.
Yeah.
If you're, but that don't protect losses from investments.
No, you can still lose money.
You can still lose money.
It's the collapse of the institution holding that money,
funds,
or the loss of that money. Yeah. So in Canada and the US, it's up to a certain dollar amount. It differs. But basically, you have this protection where if, in this case, one of the big Canadian banks were to fail, you have an insurance pool that will reimburse you.
For up to a certain
and you can actually look on these websites to see what companies are members. So you can go and check and see. If a company claims that, this guy says, well, Black Panther is CDIC insured because my personal account is CDIC insured, or my corporate account, you can go and see, well, is Black Panther CDIC insured itself?
Right.
Are these companies insured themselves? And not every company is insured, but if they claim they are, then that should be a red flag, and certainly you should look for that protection. It's a safety net that,
And be careful too, because they will kind of almost sometimes use that. And that's, again, going back to Black Panther, he would use that as a way to make it seem even more legit. So what, again, he would either say you're writing a check to Black Panther Trading, and my Black Panther Trading bank account is CDIC insured, so your money's CDIC deposit insured. That's a load of crap. But he would also say, in the case where he would encourage them to open an account at, Questrade or whatever it was, give me trading authority. He would coach them how to do that. Questrade is CIPF insured.
Right.
So your money is CIPF insured. So one, even if he was actively trading, his authority over that isn't insured. Like, so if he does something bad, even just makes bad investments, it's not insured. The Questrade itself's insured if they go under. But then they also and again, we'll put the link and you actually read all the details. It even says how that was a load of crap, because basically they showed in all the cases where they would do that, it was like within a day, because he had authority, he would actually take the money out of the Questrade and put it in his bank account. And they're saying, well, it never had any protection anyway, because it was, and then same thing,
So you can look up who is actually insured, and to that point, who is also registered to do this business, and that's something to look up as well, right? Is this a registered company? If they aren't registered, you should not deal with them, because that means they're held to no scrutiny, no audits, no sort of legal requirement. So to the points, another kind of thing to look for, you can look into whether they're CDIC, FDIC insured in the US, or on the investment side, those insurance programs. But also, if the company itself is registered, you can look into the registration of these companies. I'll also leave links to, you can look up individuals, whether they're registered to give advice. You can look up their credentials and what they have. And, to the point about pressure selling and things like that, taking the time to go through and see what the person's credentials are, the company's credentials, is really worthwhile.
And if they say that they have credentials that everyone would be jealous of, don't just take their word for it.
Yeah, that's right. Look into it.
Look into it. Do they have their CFA, CFP?
There's a lot of resources, a lot of stuff you can look up to better understand, what does a CSC license mean, or what does that registration look like? What are the tiers of registration? And really, if you want, you can even bring it to a professional. Go to a bank, because they'd be happy to tell you why this other service isn't, has red flags if they really exist, right? They won't slander another service, but maybe if they are fraudulent, another professional could highlight that.
And I know if I have a potential new client coming, or referral come in, or somebody who's, kind of curious about what we offer, a lot of times, especially when we're talking big capital, I'll actually recommend, I think it's good advice to talk to more than one person.
Yeah.
Because part of it, our whole industry isn't just return. It really, to me, it's trust and relationship.
Yeah. There's a lot of different offerings too.
There's a lot of different offerings, and I think what we do, I think it's good, but I don't think it's necessarily good for everybody all the time. No. I think I think I'm not the right, personality for everybody all the time, and I want to work with people, So I think talking to multiple people, and you can even be open while I'm looking at these options, and I think a good advisor or good professional will be like, this is a good for that, or this, I think having a good chair. But if they're like, oh, that's stupid or that's terrible, well,
if they're discouraging you or trying to isolate you from those resources, that should be a huge red flag.
I think that would be more of a red flag. So
and kind of a closing point. We always bring up cognitive and behavioral stuff, but you do see a lot of these scammers, whether it be showing their wealth or whatever, or this pressure tactic. They do really emphasize they do try to work with the behavioral shortcomings that we have and the emotional shortcomings.
Well, to go back, if you haven't watched, I think it was our very first episode, Why We Suck at Money.
That's right, yeah.
A lot of those things that we talked about are a lot of the things, marketers will use to try to get you to buy products. And I think it's the same thing like this, that some of our kind of cognitive shortcomings or shortcuts, I guess, like these scammers will go after, right? And
that, taking your time, we talk about system 1 and system 2, but taking your time to engage your rational thinking versus your emotional instinct, for all scales of fraud, taking the time to go through, verify the information you're being given, can be all it takes at times to protect yourself.
And if it's too good to be true,
it's that easy, Most of the time it's that easy. That's right, There's very few people who are running a Ponzi scheme offering 5% returns.
That's right.
Not to say they aren't out there. There's other things to look for, but if it's too good to be true, kind of just an easy rule of thumb.
And actually, one last thing too is that another thing I noticed, and just kind of a theme, which is kind of the sad effect too. And actually, I think it causes some damage too. But a lot of investors that get into these get into them on the advice of other family members.
Yeah.
So, you know, and actually, I read, and there's, you know, we didn't get a chance to talk, and I know we're probably out of time, but we could do a whole another episode just on these kind of things, because they are kind of interesting stories. But one was talking about somebody who, you know, lost money to this Canadian Ponzi scheme, but talked about how they got both of their adult children into it to invest too, and how much guilt there was there that they did this, and so I get it. Like, if you trust well, they've been dealing with this guy for 5 years, and they've always got this, like, great, this is awesome, and you kind of offload your own due diligence to a family member, which I get.
You have to be careful.
Oh, be careful. Do your own research. Verify. You know, trust but verify, they say, right? So do your own research, and it can often take just engaging one other company or whatever to find those flaws, right? Absolutely.
So thank you for joining us today for today's episode. If you have any ideas for other topics you'd like us to cover, feel free to let us know in the comments. If you're watching here on YouTube, if you're listening to the podcast, thanks for joining, and we'll catch you in the next one.
All right.
Until then, this is my YouTube sign off, but be safe out there. That applies to this.
That does apply to this one. Yeah.
Be safe out there. Thanks for joining.